Settle down. Good morning, dear brothers and sisters. Please. My brothers and sisters. Okay. Please settle down. Branch accounts. Stock and data system. First we read all the entries, we find it is not easily understandable, then we listed out all the transactions, correct? I told you the term purchase and sales and all will be used only for external reporting, and when you make accounts internally by head office, only in relating to branch we use the term stock, correct? So that screen will not be used, we'll throw away that particular screen. Understood? Another? Tara. Like that. Okay. Are you all following this? What, Rahul? How are you? Okay. Now proceeding further. Now under stock and data system, we actually prepare 7 accounts. What are the 7 accounts? Branch stock, branch debtors, branch cash, branch expenses, branch adjustment, and branch P&L. One more account, goods sent to branch account. Now listen friends, one more thing that you should remember, once again recalling that what we have learned in the previous class. Profit is actually to be booked only when the goods are sold. Profit is actually to be booked only when the goods are sold. But profit is getting booked when the goods are sent. Then at the end of the year, if the goods are not sold, then we will reduce the profit. Then we will reduce the profit. Correct? This system also should be knowing. Now entries. Goods sent to branch. Now head office only making accounts as if branch stock is increasing. Our goods reduces. We should reduce from our purchase, but instead of that we temporarily use one account called profit of the branch is accounted through branch adjustment. Over. Goods is returned. Ulta entry. Goods sent to branch. Branch adjustment to branch stock. Cash sales, cash to sales, pull the screen, cash to stock, branch cash to branch stock. Credit sales, debtors to sales, sales illa, debtors to stock, branch debtors to branch stock. Understood? So don't anything now put into memory and recall it. It is just application of common sense. Cash received from debtors, cash to debtors, branch cash to branch debtors. Bad debts, discount or anything will be called as expenses. Branch expenses to branch debtors. Sales returns. Branch stock to, generally sales returns means it is out of credit sales. But there could be sometimes the sales return may be out of cash sales also. In that case what entry? Branch stock to branch cash. Branch stock to sales return. Stock is coming in, cash is going out. Are you following up? Like that simple accounting entry. For loss of stock, special entry. Branch expenses, cost price. Branch adjustment, profit. To branch stock, the invoice price. Everybody. And branch expense paid. Branch expenses to branch cash. Now what happens? At the end of the year, some stock not sold, arrive the closing stock. Immediately, book the profit in the, remove the profit in the branch adjustment account. Adjustment account will reveal the gross profit. Transfer to branch P&L. Expenses transfer to P&L. And book the net profit. Transfer to head office P&L. Understood? Head office will prepare a training and P&L. So showing head office operations and head office expenses. So you book the P&L there. Correct? Respond. Like that we discuss data system. Data system as well as stock and data system. Understood? There is another model called single entry model. Single entry model is nothing but preparing trading P&L with the help of accounts. With the help of minimum 3 accounts we will prepare. What and all? Na? Branch stock, branch debtors, branch cash. Stock, debtors and cash. And find out missing information and directly preparing branch trading and P&L. The other two methods what we discussed not involving trading and P&L. This is our traditional trading and P&L by using some memorandum accounts and find out the missing information. Correct? We'll arrive at opening stock. Trading P&L, what information we require, that we will find out. What information we require? Opening stock, purchases, sales, closing stock. Then expenses. That's all. Understood? That way we got 3 methods. Now let us solve problems and whatever we have learned we will experience through the problem before that. Branch adjustment account should be automatically balanced. Branch adjustment account should branch stock account should be automatically balanced because all the entries will be at invoice price. Sometimes it doesn't tally. If credit is greater, then it is sales more than invoice price. Entire balancing figure goes to branch adjustment. If debit is greater, then 2 possibilities: sales less than invoice price, loss of stock. If it is sales less than invoice price, entire balancing figure to adjustment account. If it is loss of stock, that is invoice price, split into cost price, profit. Cost price, branch expenses, profit, branch adjustment. Very good.